Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst. This daily analysis video is brought to you by Trading Capital. Jumping into the charts on this August 31st. So wrapping up the month end, you can clearly see it's been another down day for the markets. And surprisingly, every sector was down on the day today, confirming the downtrend yet again, except for communications. The interesting thing about communication sectors, it's the weakest sector out of all the sectors in 2022, and it's the only positive sector, just slightly up on the closing bell today. But overall, you can see that we had a little bit of a down day on the S&P 500, down 0.78%. The downside really came at the end of the day. So that's interesting to note that a lot of people are now not wanting to hold their positions overnight. You can clearly see a little bit of a volume surge at the end, which has actually been negated on the SPY as we are heading lower on the charts. But overall, it was a pretty nasty day once again for the S&P 500. You can clearly see that it looks like the S&P 500 wants to head to this gap fill around the 39.20 level. So that's again the big area I'm watching for a technical bounce. Now there are a lot of stocks that are kind of short-term oversold in the short term, and that's why we're buying things like Zoom, Freeport-McMoRan, which we played again. I do think that there's potentially distribution signals going on in the dollar, where if it pulls back even the slightest, I think the likes of copper and commodities should catch a little bit of a bid, which would help us certainly be in the money on that trade. But overall, the intraday action, you can clearly see that we were unable to hold this key bottoming tail over here. You did make a bottoming tail over here, but you've actually closed below it. Now you have not confirmed below that bottoming tail, and if we actually flip to the SPY, you can see the resistance on the SPY. This is our bear flag pattern that broke down just like it did over here, but this is our bear flag pattern. Let me just erase some of these lines so they're a bit easier to see. But overall, this bear flag pattern has triggered, and you've now closed below this wick low. You have not confirmed, considering you are getting a little bit of volume, maybe short coverings at the end of the day. So we'll have to kind of see. But overall, the price action of the S&P 500 is not really that particularly bullish. So if we look at the daily chart, you can see that you're coming into this support zone. Gap fill is very close. You do have a trend line similar to what the QQQ hit. Let me just pull up the QQQ. So the QQQ has pierced this trend line as of today. Yesterday you got a small bounce. Today you're actually closing below it. But that being said, you're still within side of this wick. So that's going to be interesting to see tomorrow's price action if we hold this level tomorrow. So that's kind of what I'm looking for. If we flip to oil, oil had yet again another down day. So again, confirming the downside move on oil, down another 3.5%. So basically oil has almost fallen roughly 7 to 8% in as little as 2 days. So that is something that, you know, underlyingly there should be concerns in the overall economy, and that's certainly what we're going to have to pay attention to. With oil weakening, it's one of the leading indicators that the economy might be slowing a lot faster than people think. And if that's the case, the equity markets generally play catch up to oil. But oil certainly leads that race and dance lower. Let's take a look at natural gas. Natural gas has been flip-flopping around. It was down, you know, all the way at the lows here, making a brief new low, and it rallied up, closing slightly positive, just up under 1%. So overall, you're still having this consolidation pattern, but again, the buy volume is receding, it's declining, and I'm just noticing distribution signals occurring. If we flip on the monthly chart, you have got a monthly topping tail still in effect, which is what we've discussed. You failed to get that monthly close. I mean, there is 56 minutes, so you could somehow rally above this 969 level, but I find that very unlikely. So overall, there will be lots to analyze moving forward, as this is the end of the month, and we do have many monthly new candles formed on all the charts, which will give us a good insight as to the longer term patterns. So overall, natural gas, I'm still in the camp that it heads lower over time. Let me just fix this channel. I don't know why it was all wonky. I still think natural gas has a really good shot at getting 667. We're still deep in the money on our KOLD, so that is healthy to see. If we flip to the DXY, the US dollar, pretty much another pause day. You were up, you were down, and now you've paused. Again, whether or not this topping tail is holding right now, this is still technically bullish consolidation, and you have to respect and favor the upside on the US dollar. That being said, I still think the US dollar can at least form this consolidation to the lower range of this channel before breaking out higher. And if it does have a short pullback even to this wick low or the low end of this channel, that will give a little bit of a lift to some of our equity long plays, which I think will have a substantial bounce even if the dollar pulls back $1 to $2 in the short term. Taking a look at the US 10-year yield. So the US 10-year yield didn't really do much. Oh, sorry, I stand corrected. The US 10-year yield had a late day surge. Wow, look at that. I didn't even notice that intraday action. So no wonder the S&P sold off. I was wondering why the S&P sold off, and that is the answer. Yields had a strong push late into the day. So I did not even pay attention to that intraday action. That would have certainly been a leading indicator as to why the S&P 500 fell. If you pretty much look at this late day move in yields and then you flip back to the SPY, overall you can see clearly basically opposite moves. As yields pushed up, equities were forced lower. So that is interesting. Let's just look at the US 20-year yield because we are playing that. So again, another surge late into the day. You do still have this reversal signal over here, as well as this major reversal signal, which you're kind of been trading in for now months and months, which is still technically acting as resistance. So at the high end, that's still your high end. You have resistance here, and you have resistance at these wicks over here. So overall, if we start challenging this pivot up here on 3.65, I will add to our UBT play and a variety of other potential bond positions I may start to accumulate. So that's interesting to note that the bond market pushed, or sorry, the yield market pushed yields up and rates higher late into the day, potentially signaling a better than expected report tomorrow, which could mean the Fed still has to stick to more of an aggressive tightening plan. So that is something we're going to have to keep an eye on. And obviously if yields are pushing up, it should give dollar more strength tomorrow. If we see a continued move in the US 10-year yields, then that's certainly going to put pressure on the overall equity markets. We did cover a few positions today. We covered our NTR for a lovely double-digit gain, so congrats on there. We're in and out in basically 2 or 3 days. We covered our CF. I mean, if we pull up some of these charts, it's truly miraculous. Just look at this drop. Boom, 3-day move. We executed 11.818%. NTR, same sort of thing. Beautiful, almost 10%. We did get 10% actually on my account. So that's lovely to see considering it was just 3 days in the trade. And then I believe that was it. We are holding our Ambarella AMBA day trade overnight. So our AMBA had a massive drop down basically on the session, 19.5%. Now my average on AMBA is sitting at roughly, let me just pull it up here. I'm sitting at roughly 67.98, so right in around here. So I am prepared to hold this overnight. One of the reasons I'm holding this overnight is because it is into massive technical support, and you have had this short-term wedge pattern breakout where you basically had this impulse move out, failed to confirmed, got your retrace back to the breakout zone, and now you're looking to potentially pop off of this high volume. So semiconductors have certainly been under pressure. I do think that the semis are again into support, and you have not had a real technical bounce on the semis, even though you're into the 618 retrace. Tons of pivots here. You did fill this key technical daily gap, and you're still trading on the hinges of this kind of this parallel channel, and that is support. You haven't technically confirmed below that support yet, considering you're still trading inside yesterday's wick and you closed with inside that wick. So again, semis I do think can potentially catch a little bit of a bid, which should help our AMBA trade moving forward. Home builders were under pressure. That is probably due to the fact that interest rates surged. Again, we are now in the money on our ITB, so that is good to see because it is a fairly large position in our portfolio. I still think you head to the lower range of this channel before you get some sort of a technical bounce in the markets. Obviously, if the S&P 500 gets a bounce, then home builders will also likely get a bounce. Gold clearly under pressure today. You're breaking and just testing key support, so this wick low. The question is tomorrow, will we confirm below or we get that another technical bounce off of this level? This should coincide with the US dollar either rolling over or moving up. If it rolls over, gold will get a bounce. If If the US dollar surges, gold's going to continue to most likely test this double bottom. We did add to our Pan American silver today, slightly out of the money, but you can see that we are into long-term support. You have this parallel channel. If we flip to the weekly chart, it'll be a little bit of a clearer picture. This weekly chart shows you that you've just been ping-ponging in this channel. Now you're into massive support. There is one weekly gap fill that's slightly lower, which I may consider adding a little bit more if we somehow get down there. But this is a massive, massive level of support, not only on a weekly basis, a daily basis, and a monthly basis. So if you take a look at silver we also added to our SLV. Silver's approaching the low end of this parallel channel, also coming into kind of your pre-COVID, pre-stimulus breakout. You know, the fact that we've almost negated all of the money printing that sent silver flying is truly spectacular. And I just think that considering the Federal Reserve's balance sheet has barely been reduced and QT has barely started, I do think silver is kind of ahead of itself and still one of the most oversold assets. I mean, if you simply look, you've had 1, 2, 3 weeks of downside. You know, if you look on the daily chart, 1, 2, 3, 4 days of consecutive downside, followed by this massive sell-off and bear flag. So you're coming into this massive critical support area along with a completed measured move, which all factors in a probability of a likely bounce in the near term. So overall, again, congrats on the day trade winners the swing trades that we closed today, and we are continuing to pick up the likes of like Zoom. So if we touch base on Zoom, we did buy Zoom today around 80.40, which were slightly in the money by 2 cents. One of the reasons I added is if you look at the weekly chart on Zoom, Zoom has had a hard sell-off without any technical bounce. 1, 2, 3 surge to a low. You are approaching this key technical gap area as well as this parallel channel, which is connected this pivot to this pivot to this pivot, this pivot, this original breakout zone in COVID, this pivot low here, and you've now had an almost picture perfect retrace of this weekly bottoming tail. And one of the reasons that I've entered this is that yes, Zoom has been under pressure lately and has had an impeccable sell-off, but on a weekly basis, you've still not negated this buy volume pressure. So basically, all these buyers that sent this price here, we have now been able to get in lower than them, and most of them are still likely in their trade. Now, can Zoom go a little bit lower even to the 75 or pierce this channel? Yes, it can. I am expecting it to fill this gap around the 76.80 level, which will be another technical area to just add to our position and accumulate slowly. So I do like the fact that we're accumulating some longs in the event of a bounce. I love this type of rate of change sell-off where you had 1, 2, 3, 4, 5 days down, massive gap down on earnings, and now you're consolidating. Now, the cool thing about this type of play is that Zoom has been reporting strong earnings consistently. So the fact that they have decent fundamentals and you've pretty much negated the whole COVID bubble just is screaming an opportunity for me, because I still know that the fact that their user base is growing, people are still using Zoom, and in fact more people know about Zoom now and their valuations even lower than the pre-COVID level. So that is just something that screams a potential buy opportunity for me. Considering we had Zoom, you know, somewhere in around, I believe it was the 100 level, and we sold it at like 110, 114. The fact that we're getting a even lower entry just a couple weeks ago from our closing our long position that's kind of what I love. I love these rinse and repeat opportunities. So that's pretty much it. Actually, let's just go over Bitcoin quickly. So BTC USD. So Bitcoin is still bearishly consolidating. You are holding this previous pivot high. If we flip to the weekly basis, you can see clearly that's your pivot high over there. You have broken out of this channel on a weekly basis. Now the big question is, are you going to retrace to basically the breakdown zone? That is likely around this 20,800 level. But overall, Bitcoin is kind of on borrowed times. I do think that this inevitable bear flag pattern on all 3 time frames is eventually going to take you lower. Now we might have a small bounce around the 17,000 mark, but again, just be very careful. Once we confirm and break this previous 2017 high, it's going to be all on to the downside for Bitcoin and risk assets. So that's pretty much it for today's video. Congrats on the profits again. Stay tuned for more action. We do have a whole host of economic data coming out this week, so it's going to be really key to see how the markets react and respond to the economic data, the jobs, and basically a lot of inflationary news in Europe as well as GDP numbers. So stay tuned for more price action. Please give this video a big like down below, and we'll see you on the charts tomorrow. Take care, everybody. September 1, the fall is here. We'll see what happens.